Okay. So welcome everyone to the session about doing well while doing good and how we can think about blockchain technology as enabling something what we call the token economy. My name is Yip. I am calling you from Munich. And all my life I've been looking for, economic systems that can enable participants in the economic system to become contributors and to benefit in a way or receive rewards for their contributions in a way they can make a living off it. I felt this problem has not been really solved very well by the existing market economies. I myself live in Germany and we have social market principles. But when I look at to markets like the United Nation, the United States, for example, they don't have any social systems, or in Vietnam. And the problem was, or is actually currently, for example, in times of pandemics, when people cannot go to work because there are lockdown measures and they cannot make a living, or they don't receive any benefits from the nation states, then it's quite difficult to make a living of your work, right? Ah, there's Shrish from C2FO, a company that is good and makes profit. This is so cool, Shrish. So actually, that's why I'm speaking at this conference on a Friday afternoon, because I'm actually very curious to just connect with other change makers in the field. So looking at finding ways to, change the economy. In 2020, I went to World Economic Forum, and then I was looking for to talk to the CEOs, and I was just like, hey guys, what are you doing in order to, you know, do good and use your corporate social responsibility as a real responsibility to drive some change? And I didn't get very far. Right. My background is I worked in management consulting. So actually, anyway, in my day job, I was working with all these CEOs of big banks and financial services industries, such as insurance companies, and I couldn't find any way to really understand how big companies can really help to do good, nor did my clients really have an understanding of how that should work. And I was at that World Economic Forum in 2020, and I was lobbying with people like Paul Polman from Unilever. He was super strict evangelist for mindfulness. And I was like, hey, you got to keep your mental health so that you can make wise decisions and calm decisions. Because if you are in a state of stress, then probably your decisions won't be beneficial for employees, for stakeholders, for customers, for the world. Right? That was by that time, actually not too long ago, 1.5 years ago, my positioning. And was running around, felt very frustrated because it felt like everybody wanted to do good, but nobody knew how to do good. So the last day, I ran into a group of guys who were in technology. So they were also corporate CEOs, but they had a tech background from the US. And then they talked about blockchain technology and how that would, like, solve solve some of the world's big issues. But what was also fascinating about them was when we were at dinner, that we spoke about spirituality and mindfulness and how open-mindedness is a key ingredient for the future economy. I was like, wow, okay, these guys know economy, they are successful entrepreneurs, they know technology, and they are open to explore other way than profits and explore and learn about the depth of the mind and, like, something we call wisdom or intuition. And I was like, wow, I want to learn more about these people. It turns out that these people were co-founders of the big blockchain protocols. By that time, Ethereum, which is the second largest blockchain company, like blockchain protocol in the world, and then Hyperledger, which is a private blockchain consortium, currently not so big, but was very successful also. And it's still one of the big players. So I was like, wow, I want to learn more because these people are the people I want to expose myself to, because, like, maybe you guys know, when I think you typically become like the few people you surround yourself with, right? Even when you are very centered and grounded and so on. I observed that for myself so many times. I become more and more like my environment. and that just very natural. Um, so I left the corporate world because I didn't want to be with people anymore that just were not happy doing their job. And I wanted to be with these visionaries. And I went into mindfulness and social entrepreneurship and was with visionaries all the day. But then what I realized was, hey, we can be visionary, but if we don't have the right tools and the investment, like access to capital needed, then, over time, and that's what I saw with a lot of friends of mine, we just burn out. So this is also of no good to society. But I was like, there needs to be a different way. And then, like I said, I met these guys at the World Economic Forum. I was like, wow, let's look deeper into this possibility of transforming economy. For them, it seemed to be so clear. For me, it was very, very difficult. New technology, new economic principles to think about, and also just new terminology or language to learn. And I spent around a year, maybe, or like half a year to research. And then I came across my current company project called Unit. I met my co-founder over common friends, and we were already a group of co-founders. Now we are already 60 people. And what we are offering is a blockchain-based solution for which you can create something which we call the token economy. Token economy has basically two ingredients or three ingredients. And what we think is, so it's a blockchain based solution. That's why it's called tokens. Tokens are a form of currency used on the blockchain. And currency, not as in like US dollars and so on, but currency as a vehicle to bring value from A to B. And now maybe I need to explore the term value. So blockchain technology is actually seen as a methodology or a technological innovation that the, enabled something which we call the Web3. Web3 is the evolution of the internet. Currently, we would say we're in Web2. When the internet was first invented, people would say that was the basic form, the Web1 basically. And the Web1 was the internet of information, right? You could go onto the web, and maybe some of you might remember that you would go on the internet and you could just read very ugly text pages, but that's all you could do. And you could maybe chat back and forth a little bit here and there. That's when I grew up. Then Web2 is actually where we are currently reaching the peak, the plateau. And Web2 is cloud technology, driven by cloud technology. It's driven by social media. So we have created a content economy where everybody can contribute to creating content on on the on the internet, and we use mobile and cloud-based technologies to gain faster adoption and usage of this technology. What we are entering currently, and it's not a small market, it's already a 2 trillion US dollar market. So kind of big, it's maybe like 2 to 4% of the current equity markets, like stock market, right? So it's still small, but somehow gaining a lot of traction. And that market is maybe, let's say, 3, 4 years old actually only. And that's the crypto economy. And the crypto economies people call also the Web3. Web3 meaning the evolution of the internet in a way that internet is not only there for information, which was Web1, not only for communication, which is Web2, where we are right now, but it's also about transferring peer to peer in a decentralized way value. This is the promise of the new internet. And peer to peer meaning we can communicate and transact without intermediaries. And then we have, so that's peer to peer. That was possible before too, but now we have the new component of adding value to it. And then the other dimension was decentralization. So decentralized meaning a system that is basically spread across different network contributors in a way that that system is resistant to corruption. As if I were to, so it's like the opposite of having one centralized power that would control and be able to shut off the system in a decentralized world. And obviously there's many different forms in between, but in a decentralized world basically you have a situation where there's no single entity making the rules or ruling or being able to change the rules. That's like decentralization. So now we are in this Web3, and blockchain technology has contributed its fair share to making that possible. The first real use case was Bitcoin, was launched in 2009, and then 2015 with Ethereum. 2017 was like a big ICO, we call it initial coin offering boom. So that was like the early gold rush of the Web3, and a lot of people lost a lot of money. It like burst, the bubble burst, and now again we are seeing a second bubble emerging at these moments, and you will see like a lot of talk about Bitcoin and Ethereum and so on in the general press. So this is where we are nowadays. And when I spoke about internet of value or the token economy, then basically this token is referring to a means, like a technological means in which value can be transacted from one player to another. So that token represents just a piece of value. And I am saying value because value is beyond profits. Value in this new economy can be defined in many different ways. So it can be in terms of monetary value, and that is actually the major use case because it's still linked to the US dollars, but it can embed a lot more. It can actually give value to things that were not priced by the market before. So now we basically have that possibility, and that comes with like the possibility to fractionalize different payments. It comes with the possibility to have lower costs in settlement, faster speed of settlement, and also lower cost of transaction fees from people across the globe. So I can send money to my mother almost instantaneously in Vietnam, for example, without waiting for the bank to settle that, which takes like 2 to 3 days and costs a lot of money, even when we have fintech players like TransferWise and so on in the game. But the idea is you could instantly settle a payment without having a bank in the center that would need to approve. And this taking out the bank in the center is achieved by blockchain technology in a way that they call consensus mechanism. How do you actually create a system in which the network that is distributed across all, like a lot of different computers across the world, can take over the role of a bank in the center to say that yes, Yip had the money on her account to send money to her mother, and B, that this new what will be immediately in a way that we don't actually need to know who are the other participants in the market, but we can find mathematical models to make it work in a way that if the network agrees and the network agrees, then this is the new state of truth. We don't need one person pressing the button saying yes or no. So this was the idea behind blockchain. And now token economy, like I said, it has different ingredients. And token economy is what we're building with Unit. So token economy is a, a movement from shareholder to stakeholder capitalism. Shareholder capitalism being the current prevailing mode of capitalism, where the major beneficiaries of any kind of economic activity are investors and founders. That's when you look at like, you know, the startup world, or when you look at the corporate world at the shareholder structures. So shareholder economies, those who provide capital are typically the ones who benefit most. In the stakeholder economy, what we're seeing emerges, and that is on top of the blockchain technology and the tokens as a way of wealth distribution. What we can see is people who can contribute to that new economy also now have a technological means to benefit from their contributions. This means that is a technological feasibility for those creators, those customers, those employees to also benefit a lot more from capital and wealth creation than in the current world. And we're already seeing some first use cases or success stories in the market emerging. Like I said, the market is already 2 trillion US dollars, and around 1 billion um, of capital is already locked in what we call smart contracts that do not have a single entity that owns them, don't have a bank, but is owned by the community, run by a computer code that was designed and can be changed by the community of owners who don't necessarily know each other. That's called a decentralized autonomous organization. So a lot of terminology. I'm sorry about that. And yeah, so token economy has this kind of idea that we go from a world of shareholder capitalism to a world of stakeholder capitalism using technology, blockchain technology, and design mechanisms of that are inherent to cryptocurrency. So that's the first one. The second one is we have a world in which the economic design, the market design principles are structured in a way that competition is less attractive than collaboration. Why is that? And why is that actually good? It's good because if you have a world, like if you have designed a game in which it always makes more sense to collaborate with each other, then you have designed a world in which competition is only the second best option, and what you end up with is from the idea a bigger pie, because people would work together to increase the pie rather than trying to fight to about the share within the same size of the pie. How is that possible? That's possible because you created mechanisms in the cryptocurrency world where each token represents also a part of ownership in a collective venture. So basically, what happens is you win when somebody else wins too. Either way, either because you win the business or because you own a part of that business that belongs to all, that public good. And when your neighbor wins the deal, still the entire economy is doing well. So thereby, and because you have a part in that economy, you are doing good too, right? So that's a world in which incentives are aligned, individual incentives, but also public incentives that go in the same direction. And now we even have models that are designed in a way where, you know, carbon emission reduction is priced into the system. That's like in a playful game theoretic way, but quite successful. The projects haven't really launched yet, so they don't have a lot of traction, but there's really good movement in the market, and I expect by the end of the year to see a few really good first cool use cases. So what we would have there is a market in which carbon emissions, like there are incentives where people buy up carbon emissions to drive up the price of carbon emissions. And those entities that produce solutions to reduce carbon emissions receive carbon emissions, the price of the carbon emissions, right, as a reward for their reduction of cleaning the environment of carbon emissions. So you have created a system in which the good incentives are the dominant winning strategy. It's a bit abstract and it's still a lot of it is still theoretical, but we are seeing already really, like I said, a few first use cases, and I expect a lot of these projects to raise millions of US dollars by the end of the year, so within the next like 8 weeks. Then the third the third ingredient of the token economy is we have created a system in which wealth allocation, like allocation or distribution of the wealth created by the few, is distributed to the many. And this is a feature or an attribute of the token economy in a, or not in a way, but because in the cryptocurrency world, everyone could just issue a token very, very easily and participate immediately. There are no instances in between that basically deter market participation, such as when you nowadays raise funds, when you are a startup, and I have many startups, when you want to access funds, you typically have to find angel investors, you have to be good friends with angel investors or venture capitalists, you have to go to your bank, and your bank does a lot of cross check and so on you. In the world of tomorrow and the world that actually is being built right now, you issue a token and you could have access to liquidity immediately. You have the same conditions as every other market participant, regardless or irrespective of your heritage, irrespective of the world you're living in, because your pool of money is global. And the second thing is you actually have a way to how can I say, to create liquidity immediately. So when you currently do investments, your capital is locked up typically 5 to 7 years until a company goes public, right? Or is being sold. So exits are a value driver. In the token world or in the cryptocurrency world, you don't need to wait for your investment to seek for an exit strategy, because the cryptocurrency is traded immediately in the markets. So if you gave your friends 10,000 US dollars, you don't have to wait for them to be bought up by, like, as an investment, you wouldn't need for them to be bought up or go public to get your investment plus the profits back. But you can actually already tomorrow sell how many shares, whatever you possess, in terms of the 10,000 that you received in return for your investment. You can immediately trade them on the market. So there's immediate liquidity. So then with that, you have lesser of a risk to lose your money or to be stuck in an investment and needing to sell the investment at a lower price when you need cash because somebody in your family fell sick, or because somebody got married and you want to buy a nice gift or whatever. So your cash is basically liquid from almost day one, depending on the different schemes that are in the market. So that brings new dynamics. It brings more access to capital also for smaller projects and also for riskier projects. So why is that important? And now I want to end that with doing well while doing good, because it gives, for example, investors the possibility to invest into assets they might not really invest into, that take very long time to manifest, to bring a return, right? And this is mostly social projects that take forever to really showcase the benefit. But if you have a market that is fairly liquid, then basically the risk of you getting stuck on your investment is less. So that would favor, in theory, and we still have to see if that works out or not, projects that typically would take a longer time to perform. So it takes out short-term performance pressure, because it solved a part of the market where liquidity plays an issue. Then doing well while doing good in the blockchain economy, and you also have methods to become a stakeholder, not only by lending capital, or actually by lending capital, but then by using that capital to secure the security of the blockchain. So you make your capital work for you. And we have now mechanisms that give you returns for you securing the blockchain. And these returns, because we can use automation technology like smart contract automation, fractionalization of rewards, tools and mechanisms already there that could enable it. Another big problem is just charities typically don't know yet how to accept cryptocurrencies. So as we are speaking, a lot of projects are trying to figure out how can they actually help charities accept cryptocurrency. So that's not only on the regulatory part, but also on the technology part, because most charitable causes don't really understand technology. They are run by, people from um, ages that have never really used computer to work with on a more automated and digitized way, right? And then um, so that is still needing to be solved, but I think it's a matter of the next 12 to 18 months maybe to get these. Actually, maybe even earlier, you would already see like 6 to 12 months already the first real good working projects at scale. And then doing well while doing good is also, yeah, participating in the crypto economy is actually quite profitable. If you had invested into comparatively low risk assets such as Bitcoin, Ethereum, you would have on average probably had 50% of return already on $1 invested. So had you invested, let's say, $1 at the beginning of the year, 1st of January, into Bitcoin or Ethereum, you would have at least now made $1.50 out of it, because the economy is growing very big and we see a lot of volatility, but the average trend is going upwards. And this profits could have been used to finance a lot of sustainable products, right? And you could have just invested like $10 and already made $5 that could have gone somewhere. So, long story short, beyond just being profitable, as a financial asset, there's many different ways where blockchain company projects are building and contributing to something that is called the token economy of the future. And the token economy is an economy that uses tokens, cryptocurrency built on the blockchain, to go from shareholder economy to stakeholder economy, where collaboration is rewarded more than competition, and where we see a wealth asset allocation from the few to the many. So the pie is getting bigger and more people participating in it. Thanks very much for listening. And you can always connect with me. My name is ThyDiep. You can find me on LinkedIn or check out unit.ventures or unit.foundation.